Welcome to another stage analysis video. It's Wednesday the 8th of November 2023 and with the midweek video going to go through a brief look at what's happening with the major US stock market indexes and some of the short-term market breadth. A look at what Bitcoin and Ethereum are doing as well before getting into yesterday's watchlist stocks in a bit more detail. A number of them had earnings after the bell today, so let's have a look at what's going on with those as well. So starting off with the S&P 500 as always. I talked about on the weekend videos about obviously being a little bit extended in the short term. Obviously we had a very strong move up. The breadth improved dramatically from the percentage of stocks above their 20-day EMA down the bottom here, improved from the lower zone all the way up to the upper zone, which is something I've obviously talked about in multiple videos over the last obviously month or so. We were looking for a strong, what they call a breadth thrust as such, to move from a weak position to a stronger position. So currently seeing that we've obviously pulled back so far. It's been fairly muted, continuing to be a bit of a lockout rally type environment, which I did highlight on the weekend breadth post, that obviously any kind of pullbacks, a sign of strength would be if the intraday pullbacks were bought back up again, and we could obviously get that lockout type rally scenario, which so far we've been getting, but we still haven't made a new high above the October pivot high as such. That was a little bit under that still, but sitting right on it. We're above the plus 1 ATR level, which is what we consider in a short-term uptrend level. So you can see for the majority of the last 3 months here, if I just highlight that line, you might not be able to see it so well on the obviously the lower resolution video there. So you can see we had a little brief pop up above it back in late August there before rolling back under again, but for the majority of the last 3 months it's been below that level. So you can see there's a bit of a change of behavior over the last 4 days here, with the closes above it and holding above, so and sitting just above its 50-day moving average as well. So moving average is starting to get back into the right stacking order. The 50 days is still above the 21-day, however, and we are in stage 3. So something that I'm not seeing a lot of talk about online. There's obviously lots of people are excited by the short-term move and obviously the strength of the move, but obviously with the strength of the correction that we've had over the last 3 months or so, we actually saw a lot of stocks break down into early stage 4. Even the market itself had a brief break into stage 4 for a week in many of the major indexes. So the return back into the stage 3 range at the moment. So it's not necessarily a positive environment. It's more of a choppy distributional environment at the moment. So although stage 3 can be obviously can have very big swings both on the upside and on the downside. So at the moment we're in one of those obviously strong upswings. So until we see different, obviously we're still in stage 3, and hence caution should play a bigger part really. As obviously the more speculative stocks, although they're running strongly at the moment, obviously could get whacked at some point very soon if that stage 3 continues to play out. So at the moment 66% of the S&P 500 stocks above their 20-day EMA, so a positive position in the short term here. We look at the Nasdaq 100, similar double bottom type pattern on this, with a reversal just above its 200-day moving average there. Again, hasn't cleared that October pivot high yet, but continues to run up towards it, with the intraday pullbacks being bought over on Monday and on today on Wednesday. So 69% Nasdaq 100 stocks above their 20-day EMA at the moment. So again, in a strong position after a move from the lower zone to the upper zone. So on a positive signal on the short-term breadth there. Again, above its plus 1 ATR level for 4 days in a row now. So definitely a change of behavior in the short term, as we haven't had many closes above that 1 ATR level for a while. Again, back in, what was it, late August, we had that brief pop above but rolled over quickly. So if we can see some follow through, we start to get above, then we can hold on any kind of pullbacks. Potentially we could see a test of the year to date highs, but obviously no guarantee of that. But again, if we are in a stage 3 type environment and we do manage to break up towards the old highs, then there's obviously always that chance of what we call an up thrust after distribution. We could have a continuation breakout to new highs. It looks like we're making a new stage 2 breakout attempt, which could then, if it's quickly slammed back down into the range again, and then any attempts to push back up again, and that could obviously form what we call a UTAD at that point. So that is obviously a risk once we get up, if we do manage to get up to that level. But at the moment, obviously short-term strength, so we're on a positive short-term trend change here at the moment in the Nasdaq 100 and the S&P 500, but not yet making higher highs and higher lows. So we've not yet had what we call a change of character. We've only had a change of behavior so far, as the downtrend hasn't yet been obviously completely overdone yet. So NYSE also similar kind of behavior, a little bit weaker on the pullback here. We're still below that October pivot high there, so obviously the recent pivot a little bit weaker than what we're seeing in the Nasdaq and the S&P 500, which are continuing to push towards that October pivot high. The pullback in NYSE for the last 3 days here, but still just below the +1 ATR level, above its 21-day, but still below the 50-day and still below the 200-day moving average. 57.47% of NYSE stocks above their 20-day EMAs at the moment. So in a healthy position, again, got that breadth, strong breadth move from the lower zone to the upper zone, with stocks getting above their 20-day EMA there in the short term. So a change of behavior, stronger than we'd seen over the last few months or so, but obviously it hasn't yet followed through with the price action back above the medium and longer term moving averages here. Same with the Russell 2000, but a little bit weaker. It's pulled back into its 21-day moving average, so weaker than we're seeing in the others, 55.5%. But we've had that obviously local spring event here after obviously it was moving back down in stage 4, rallied back up to its 50-day moving average and turned back into that 21-day. So in the short term, obviously rattling around the very short-term and short-term moving average here, so it can rebound and recapture that 50-day moving average back through this obviously area of pivot highs. It was 3 obviously pivot highs through this zone here, this one sort of 76177 area, and then potentially could turn more bullish in the short term. But at the moment, if we go to the weekly quickly, you can see we're still within that very broad range that we've been in for the last year and a half. Obviously the pivot lows back in the end of 2022 and through this year, it's obviously broke below and sprung back up from. So at the moment we've got a spring and a test type event going on. So if it can hold, make a higher low here and then start to push back out, then obviously that could be an interesting scenario there, and we could move then obviously for a test up through the range back towards stage 2. But at the moment still reversing back into the broader stage 1 range there with the Russell. Look at the equal weighted charts of the S&P 500 and Nasdaq 100 as well, similar to what we're seeing with the Russell 2000 there. The 3 recent pivot highs back in late September and early to mid October haven't yet been overcome. The most recent pivot at the end of last week, obviously we've pulled back from, so again it's weaker than what we're seeing with the major index, so in comparison, so but 39.8% above their 200-day moving average in the S&P 500. So still a ways to go to get back to that 200-day moving average as well, so still another 3 to 4% to recover the 200-day, and still sitting below the 50-day as well. So at least need to break last week's pivot and the recent pivots here in order to get a little bit more bullish. But at the moment, again, just a change of behavior, potential double bottom type pattern forming. We will obviously see how this develops. If it starts breaking back below this 21-day moving average, obviously the October pivot low there, then obviously that would be a potential warning there of a sign of weakness. Same with the Nasdaq, still below the October pivot high here, not showing the same strength as the Nasdaq 100 itself, so but still just hovering below its 50-day moving average, but it is above its 200-day moving average and the 21-day there. So we need to see this follow through, hovering around the 1 ATR level, so attempting to make a short-term trend change here. So a quick rough drawing on that trend line down here. It's just sitting right at that channel resistance there at the top of the range. So we can start pushing through, obviously start recovering back above the October pivot, then would be a little bit more bullish, but again remains in sort of stage 3 type area after a failed stage 4 breakdown attempt. So it's just back into the stage 3 range again. Let's move on to the VIX. So this has shown some positivity over the last few weeks here. You can see that obviously consistent moves lower over the last 2 weeks or so, broken multiple pivot lows here, and now drifting down towards into the 14 area. So in a positive position at the moment, below its 200-day moving average. So anything above obviously negative, anything below is positive, and obviously in close range is more neutral. So pulling away from that and pulling away from these recent swing lows, so in a more positive position. So if it starts to recover back above that 16 area there, then obviously would start to get a bit more negative again, and